if we want to do this again in tax time, we can try something different.
And you brought like a 6-inch book with you too that you didn't have to go through.
That's a summary.
Hi, I'm Todd Farmer.
And I'm Sam Wright, and this is What Should You Ask?
All right, so today we are talking about all things tax related, right? We both canceled our root canal appointments and we're going to talk about taxes instead. It's about an even trade.
When I get a letter from the IRS, it's like I almost break out in a cold sweat.
Oh, I know. Even like a change of address letter or something. You don't know what it is.
Yeah, why are they contacting me?
Yeah.
I don't want to hear from these people.
Yeah. So, Todd, do you file your tax return right on time? Are you an extension kind of guy?
No, I'm an accountant by trade, so I'm a little meticulous and I keep fairly good records. So I like to file it early just to know if I owe him money.
Oh yeah. I want mine prepared early. I may not date my check till April 15, but I absolutely want to know how much I owe. What about the first paycheck you got where they took out taxes? Do you remember that?
I was working at Bonanza. I made $3.35 an hour, and I got my first paycheck, and I'd already calculated what 335 times 25 or whatever my hours were. And I sat there just kind of dumbfounded that the numbers didn't match.
Yeah. I had a very similar experience at Kroger, bagging groceries. And I mean, man, you talk about, I'm going to try to prepare my kids for that because you talk about.
I'm not going to tell mine. We see a number of clients who are small business owners that really get themselves in a significant financial bind because of unpaid taxes. And I think the number one mistake that they make is they want to wait all the way till it's time to file their return to pay any taxes in. Look, I tell people, you make quarterly estimates based on last year. And look, we get to the end of the year and you overpaid a little bit, you can get that back. But it's awful hard for small business owners to come up with a big lump sum at one time.
Yeah, all at once. Yeah, I would agree. Make payments and then try to sock a little bit of money away.
One of the most common deductions that I think people have taken in the past and really probably been a little too liberal with are charitable deductions. I'm sure you obviously, you and I both support a number of charities, including our churches. And you can't give a 15-year-old couch and get a $5,000 deduction.
You can't. It was leather, though. It was leather. We donate things that we don't use anymore, but most of the time we try to get that receipt for a tax deduction.
That's the key is if you're going to give things to charity, you've got to have the receipt.
Yep.
I think that's one of the IRS's hot buttons that they look at are people with undocumented charitable contributions.
Yeah.
Sam, we have a number of clients that come in and their delinquent taxes are causing them a considerable amount of stress. What do you think what's the main message you want to convey when people come in with that situation?
So when folks come in with that problem, what I really want to tell them, provided that they've timely filed their tax returns, is I tell them that we've got to get in communication with the taxing authority, whether it's the IRS or the Kentucky Department of Revenue, to come up with a plan to repay it.
Yeah, and I just want people to know when they're in that situation that one, there is a way out.
Absolutely.
And we can help them deal with that, and don't let it overburden you.
Yeah, because in certain situations, those taxes are dischargeable in things like a bankruptcy, for example.
Sure.
If they meet certain qualifications, a lot of our clients in our law practice, they don't think taxes are dischargeable in bankruptcy whatsoever, but that is not necessarily the case.
Life doesn't stop just because you're injured. In fact, life keeps going on around you and gets tougher. If you find yourself incapacitated or otherwise unable to go about normal life because of an accident, it's time to talk to attorneys Farmer and Wright. Don't delay. The sooner you file your personal injury lawsuit, the better. Farmer and Wright have helped people just like you get compensation for their medical bills, lost wages, property damage, and other costs. Fight for what's yours. Talk to Farmer and Wright today. Go online to farmerwright, that's right with a W.com.
Welcome back. I'm Todd Farmer.
And I'm Sam Wright. Thanks for joining us on What Should You Ask?
Today we have Chip Cox, who's a certified public accountant and a certified financial planner. And from Chip, looking through your bio, it looks like you had over 30 years in accounting. Is that right?
Unfortunately, yes.
Yeah, since almost the beginning of time.
Yeah,
right?
so
It feels that way.
Chip manages a number of clients, and whether it's accounting and finance, and assists with their taxes. And the tax code seems to always be changing. So we thought it would be a good idea to get someone on here today to talk about some of the things you may or may not be aware about.
That's right. So let's start with some basics, Chip. First of all, does every human in America have to file a tax return?
No.
Okay. So when do you know you've got to file a return?
Basically, if you're self-employed, in other words, work for yourself, if you have over $600 of income, then you get to file.
$600 a year.
Yes.
So if you help clean houses, you got to file.
Right.
Okay.
Right.
As long as you have that self-employment income, it's $600.
Okay.
So how does that work? Like, let's say you've got a high school kid. Do they file a separate return, or are they on their parents' return? How does that work?
To give a very simplistic answer, they file their own return.
Got it.
If the income is interest and dividends, those type of things, they can file on their parents' return,
Okay.
depending on their age. There's no easy answers in tax.
No, you sound like a lawyer. So explain to us, like married filing jointly, married filing separate. Talk to us about that kind of stuff. Like, what if somebody's spouse owes back child support, or there are ways that they should file?
If you're married, it's whatever your status is as of December 31st. So if you get married during the year, you're married for the whole year.
Okay.
If you get divorced during the year and you're divorced as of 12/31, you're divorced for the whole year.
You probably practically been divorced the whole year anyway, right?
Right.
Yeah. Practically speaking.
But as long as the married filing jointly, typically, I'm thinking in the years I've been practicing, I've had a handful of clients that it's better for them to file separately
Then jointly. Okay.
But if you have certain situations such as the student loan debt, things like that, it may be beneficial to file separately, even though you'll pay more tax.
The questions that we came up with about certain deductions you can claim if you take the standard deduction versus the itemized deduction. Is there like a simplistic explanation you can give to listeners?
As I said, tax, there's no simple answers. Basically, several years ago, every married client, every married taxpayer, you got to start out $24,000. It's indexed for inflation, where that's the standard deduction
Okay.
Is that per person or per married couple?
per married couple.
Per couple. Okay.
And it's half of that for a single.
Got it. So most people probably don't have more deductions than 24,000. So the
Correct.
standard deduction probably works for most people.
For most people on the federal return, yes. Now we're talking Kentucky return. The answer is you get to deduct charitable contributions, mortgage interest, and most people file standard deduction on federal, but itemize on state.
In our law practice that we own, we represent small business owners and truck drivers and contractors and roofers. Everybody talks about what they're going to write off. I mean, what are you really supposed to be able to write off, Chip?
If you have your own business, it's a whole different answer.
Okay.
But as most people have W-2 income, work for somebody else, there's very little that you can write off anymore.
So if you're a W-2 employee and you're driving 20 miles to work and back every day, can you deduct mileage, Chip?
No.
What about the cost of uniforms?
No. Non-reimbursed employee expenses are not deductible.
I'm the anti-pack rat. I really get a lot of enjoyment out of throwing stuff away. I don't know, that sounds odd, but I'd love to throw stuff away.
Once a year at least. We will both be in this office on like a Saturday morning. And I mean, we are throwing things out, keyboards, cords.
If it's not nailed down,
it's gone.
it's gone.
You need to come to my house, my office, and
So,
Oh, Lord.
so on that note, if we like to get rid of things and we like to keep things organized, how long do you recommend that people keep like receipts and all that from their taxes? How long should people keep their tax information?
okay, nothing simple. Remember,
Sure.
most people, I tell them at least 3 years. The IRS can go back 3 years. So right now, let's say you got 20 19, and 18. And up until April 15th, you got 21.
Mm-hmm.
So that first year drops off on April 15th. So I say at least 3 years.
So the other day I was cleaning out a cabinet to move some furniture around, and I had a file that had all my old tax returns in it. And I found my first tax return that I ever filed was in
your
the box. When I got my first job.
Oh, you're kidding.
Out of school. And I found my tax return.
No kidding.
No wonder I was so skinny. That's all I can say.
That's great. There's no telling where I ought to get a tax transcript from the IRS just to see how much I earned.
Well, you get that every year with Social Security.
Oh, does it break down the years of my earnings?
Yes.
Mm-hmm. Yes.
So this is a good point for our listeners. So if somebody wanted to see a breakdown, I think they can go to mysocialsecurity.gov or something.
Right. And set up an account, and it has your earnings by year. And I suggest people do that, every year.
I feel like
I got a common myth that you hear that I had a family member used to tell me he never wanted to file an extension because he was afraid he'd get audited, and there's more likely to get audited if he files an extension.
Well, some people say just the opposite. Audit is, the IRS is very good on that point in that they do not let you know what kicks out an audit. But generally, in the accounting profession, we think it's more if something is well out of line.
From prior filings.
Or
the national average norms. Yeah.
You're deducting you've got your dog as an employee and, those kind of things,
Was I not supposed to get my dog a Social Security number? No.
Back in the 80s is when they required you starting to put a Social Security number for your children on the return. And the number of dependents in this country dropped dramatically. Just a little funny story.
That's great. What are some expenses people typically forget to include in their return?
Again, with the new standard deduction amounts, it changes. But in the past, it's been things like taxes on their autos.
That's always a trick. You always email me about that, Chip. I've gotten better, but I typically get an email from Chip that says, hey, give me your auto tax.
That's
receipt.
Historically is the one, but contributions is very important. And last year and this year, you get to have a deduction for contributions. It's a small amount, but it's called above the line. In order to get to your taxable income, you can deduct like $300 of charitable contributions. So we've got to know that. As a tax preparer, I can't assume that you make that charitable contribution. You've got to tell me that.
Right.
We're going to take a short break. When we come back, Chip will be answering our questions regarding the upcoming tax season, what to do if you owe taxes, and possibly we'll even discuss the new child tax credit. This is What Should You Ask?
Social Security disability is supposed to be a safety net. It's supposed to help people who are in great physical or mental distress. But Social Security disability is frustratingly difficult to navigate. And that's where Farmer and Wright can help. Attorneys Farmer and Wright are experts at helping people just like you get the compensation you deserve. If you or a family member are having trouble getting Social Security disability benefits, contact Farmer and Wright today. Online at farmerwright, that's right with a W.com.
Welcome back. I'm Todd Farmer.
And I'm Sam Wright. Thanks for joining us on What Should You Ask? So today we've got Chip Cox, a CPA with over 30 plus years of experience, both business and personal finance and taxes. Right, Chip?
Yes.
A big thing that's been in the news really a lot this year, and I think has really made a significant impact on a number of people, were the changes in the child tax credit. First of all, what is the child tax credit and how did that change
last year?
change?
Well, the change is there's an amount change, but the main thing was that the IRS is prepaying you for that credit. And notice I said prepaying. It's going to be a reconciliation process on the return. I've not seen a draft of the return. This is just stuff that they've put out in advance, but it will be a reconciliation process. So if you have a child this year that you didn't have last year, then you'll get the full credit.
So you used to get the credit when you filed your taxes, like in, say, March or
And
April.
that's still going to be the worst case scenario.
Otherwise, though, so they started basically giving people some of that money in advance starting in July of last year.
Exactly right.
And so if let's say that you were going to get $4,000 back on your child tax credit. If you've been getting $300 a month this year for $3,600, you're essentially only going to get $400 more. Is that right?
Right.
Okay.
But the thing, I've had clients call, well, I got the payment in July, but I didn't get one in August. And I got one in September. What do? I didn't get that payment. Again, it's going to be a reconciliation process. So clients are going to have to tell me, I've got 5 payments of $300.
There's going to be a bunch of people that go to file their taxes expecting to get a large refund, and they got it in advance.
Yep.
That's important to know.
Exactly right. And, typically, guess who they get mad at is the tax preparer.
I've got another myth. I've had a number of clients over the years that they owed taxes, and they knew they were going to owe taxes. And I would ask them to see a copy of their returns, and they would say, I couldn't file my taxes because I couldn't pay them.
Because I owed money.
My experience has been file the return. There are several penalties. There's a penalty for not filing, there's a penalty of not paying, and then there's interest. So if you file the return, that penalty for not filing does not exist. And contrary to what most people think is IRS will work with you. I hate to say they're the nicest guys in the world, but just like anybody else, if you communicate with them, if you are honest with them, they'll work with you. They won't, automatically come and take your house.
But they don't like it when you don't tell them
exactly
your income and how much tax.
See,
they don't like that.
I was going a different direction. The old Ronald Reagan quote, the most dangerous words in the English language. I'm from the government and I'm here to help.
Well, there's some truth to that. But at the same time, they're more understanding if you file the return and say, I can't pay, you can set up a payment plan. They'll give you, I think, even 5 years to make those payments, over a time period.
A number of people will go to either I'm just going to call it a tax preparer. There are a number of tax preparers only, H&R Block, Jackson, there's a number of them out there that sort of come in town, open up shop.
In Walmart.
Do some taxes and leave. Why should somebody choose a CPA over using what I'll call a tax preparer?
Well, CPAs typically are here year round. My clients, I want them to call with questions. And most of your places like H&R Block, they give you a number to contact, but you may not see the person. The ones the IRS is trying to close is, the little old man, little old lady down the street that prepares 10 returns a year, and typically they're not right. Typically there's mistakes on them. It's amazing. I'll get a client every year that, well, so-and-so e-filed my return, and come to find out it's never been filed.
Right. And
so, what you want to ask is things like, if there's a question in September, are you going to be here?
Right.
If I get a letter from the IRS, what happens? And, most of your CPA practices, we're here. Most of your licensed IRS practices, and when I say that, it's enrolled agents and even the H&R Blocks, somebody will be here.
A lot of clients in the law office that we have, when I say you need to go to a CPA and have your tax return prepared, they get incredibly nervous about how much a CPA is going to charge. And I've looked at the fees from some of the tax preparers, and I know some of the fees of CPAs. And I mean, the CPA isn't more expensive than this.
Well, and I like dealing with the same person. I like to get to know people, and I like to deal with the same person each year. Versus starting over fresh with somebody different.
And that's the same with me because, my clients, typically I see them every year. I know they have what's your new child? I know beforehand some of the questions to ask.
Right.
So what happens if I owe back taxes? What happens if, I took money out of an IRA and forgot to withhold, or I owe some back taxes? Will the IRS work with you?
Yes. They will collect their money, but they will work with payment plans and things like that. Again, communication is the key. And, when you get a letter, I call them love letters from the IRS, make sure you respond.
That's not what I call them.
Yeah, I don't call them that either. It's like a blood pressure check for me.
Right. But, the main thing is don't throw it in a pile and 6 months later, I got this letter. I've gotten clients bring them in, they're a year old, and it's like, there's nothing we can do. So stay within their time frames, communicate with them. Communicate even stuff like, I need more time.
Right.
And things like that. So the worst thing is, again, not to respond.
Tell me, what does an audit look like from the IRS? What's it start with? Does it start with a letter? Or do they come knocking at your door or what?
The IRS is 100% by letter. So when you get the phone call about, I'm from the IRS, you need to do this, just hang up. That's a scam. Basically, letters only. And typically, if you filed a joint return, the husband and the wife will get the same letter.
Mm.
So you'll get 2 letters. And in the letter, they'll say, we're examining these items. Todd, you get to dig back in your files and find all those receipts. And we tie them in the numbers. In my practice, again, I don't know how those CPAs practice. I'd rather the client not go to the audit with me. The reason for that is I want to tie in all the numbers, but then the IRS has a litany of questions that they have to ask the taxpayer. So guess what? If the taxpayer's not there, they can't ask those questions.
Gotcha.
A funny war story, several years ago, I had a guy got audited. It's back when auto mileage was the big deal.
Mm-hmm.
And we had the auto mileage and, we went in and I presented to the IRS guy and I told the client, I don't want you to go. And he's like, I'm going. I said, well, keep your mouth shut. Don't say a word. And so we got to the mileage and it was pretty well. He was like, everything looks good. Then he turned around to the client and asked him one question and we ended up losing the whole audit. So I don't want the client there.
I would be fine with that advice, wouldn't you, Todd?
So for whatever reason, let's say I got behind on taxes or I forgot to file taxes. Can you still file old tax returns? Like,
yes.
Let's say I forgot 2018. Can you still go back and file?
Very much so. I've had some back in the 90s. You've heard about the 3-year statute of limitations, and William talked about that a few minutes ago. There is no statute if the return's not been filed. Even if you are a taxpayer that you don't have to file a return, I always suggest file something because then that kicks that 3-year statute into place. If you have a return from the 90s that you never filed and the 3-year statute's still there, and it's amazing, I've had some that they have refunds and they never filed.
Yeah, we see that sometimes in our business where folks, they won't file a couple years and then they think they're in the ditch. And then they're like, well, I don't want to file any more returns for the rest of my life. And you tell them you can go file returns. Do you have ways of working with people, like if they can't remember how much they made or anything like that?
You just do the best guess scenario.
Okay.
I usually try to put that in the return that we're estimating this based on these facts. And again, the IRS, they may have other means to tell you the right numbers.
Mm-hmm.
And I've seen where we've estimated too high. And they come back and say, no, it was really this. But the one thing about filing late returns is that 3-year statute, you may not get your refund if it's after that 3 years.
All right. So Chip, thanks for joining us today. So if you're in a situation where you need help filing taxes, you're behind on filing, or need help on assisting with what back taxes you might owe, you'd be able to help folks with that, right, Chip?
Yes, I would, and probably pretty much any CPA.
Good deal.
I don't know if the tax preparer places like Jackson Hewitt or H&R Block would do that, but I know CPAs, I've got the programs on my computer for many, many years.
Right. And that AICPA, that organization, you can probably find a CPA through that website too, I bet, right?
Yes.
Okay. And
or just phone book or Google.
Cool. And we'll post that information on our on the website portion of the podcast.
Well, thanks again, Chip, for coming in.
Well, thank y'all.
If you like what you've heard, make sure to follow us on social media and subscribe to where you listen to podcasts. If you loved what you heard, then leave us a review where you listen and tell anybody that we're at whatshouldyouask.live, and we'll see you next Wednesday.
Every Wednesday, we ask, what should you ask about life topics? So make sure you come back to hear about what we're asking.
What Should You Ask is hosted by Todd Farmer and Sam Wright. The producer is Jennifer Caldwell. Visit whatshouldyouask.live to download additional episodes, suggest a future topic, or get a free book from the host. The information provided on this podcast is for informational purposes only and should not be considered as legal advice on any subject matter. You should not act or refrain from acting based on any content mentioned without seeking legal or other professional advice in your area. The hosts, guests, and sponsors remove themselves from all liability for actions you take or fail to take based on any content in this broadcast.